Go. All right. So tell me about your history. You started with some forex trading.
Yeah, that was like 3 years back, and I moved to Australia recently. Actually, that was like in 2015.
Awesome. Whereabouts in Australia are you?
Yeah, yeah.
Where in
Pardon?
Australia are you?
Oh, I'm in Sydney now.
Oh, nice.
Sydney.
I'm from
Yeah,
Brisbane.
yeah, yeah. I saw that. So, but you're staying in Thailand now, right?
Yeah, I live
But
in
I
Thailand.
think,
I'm coming back in
yeah.
3 weeks, actually.
Okay, great.
Mm.
So if you come to Sydney, we can catch up and
Sh-
meet up. Yeah.
Sure. I'm not sure if I'll get there this trip, but yeah.
Okay.
All right, man. So keep going.
Yeah. Yeah, so that's when I moved to Australia and I was looking for a job, and then I started sort of this forex trading, and so I was learning, yeah. So
Hmm.
I was learning the basics and started trading with the trial accounts,
Hmm.
and but then it didn't really go anywhere, sort of. So I didn't have the confidence. I sort of was doing more of scalping.
Hmm. And
So
this is before you started doing real money, or just small money, or
no, mm, yeah, with real money, with just like $500.
okay, yeah, yeah. That's the perfect way to start, by
Yeah,
the way. That you
yeah.
can you can get a lot of experience with not very much money.
Yeah, 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 exactly. So out of 500, I think I put in 550. So I sort of lost like $50,
Hmm.
and then I sort of got a job and I stopped it right there. No,
Gotcha.
so
Well, that's a nice place to
yeah,
start. Um,
yeah,
so when we're talking about building a system, we've got to start with really what are you doing it for? Are you doing something to maybe make some savings and grow that over a long period of time? Are you looking for something
yeah,
that you sit down at the screen and do every day? Are you looking,
yeah,
and in my opinion,
yeah,
the best way to
yeah,
start trading is part time. You
yeah,
never really
yes,
want to.
yeah, exactly. Yeah, that's what I want to do, but I don't want to sit in front of the screen for like the whole day or even a few hours
Perfect.
because I don't get time. I have got two small kids, so I can't manage time for that.
Perfect.
So
That's very similar to
yeah,
myself. I used to day trade and I used
yeah,
to run intraday systems and I don't want to do that anymore. I rebuilt my capital to the point where I want my I
okay,
want my work to take about an hour a day, and then I want to do what I want to do.
okay, yeah. That's what I want to sort of like start with like part time, what you said,
Hmm.
no, and maybe if some side income. But my real goal is to grow it over time
Hmm.
because my whatever I'm earning now, I can support myself and my family.
Hmm.
So I don't really need the money from trading, but I want to grow it over time, maybe in 5 years or 10 years.
Okay.
Then I can think of it as sort of a profession. That's what my target is.
Okay. Now, how good would you say you are at reading the charts? Like, I know you've looked at the price action
Yeah,
masterclass. How comfortable are
yeah,
you with that sort of material?
yeah. I think I was okay,
Hmm.
but I don't know. Maybe there are some psychological issues. So someday I would go do very well. Someday I would like lose it all and more.
Okay. So we become more consistent by moving away from this idea
Yeah,
that I'm going to like work out what's going to
yeah,
happen with the market
yeah,
right now. We move to a more
yeah,
systematic approach, so we become more consistent. And
yeah,
the downside is that you're not as good. You don't. You're never going to be as
yeah,
good as you can be on your best day. But
yeah,
on the whole, it's just a much less stressful way to go, if you know what I mean.
yeah, yeah, yeah. That's exactly
Okay.
true. Yeah.
Did you have any thoughts about stocks, futures, FX, cryptocurrencies? Did you have any particular thoughts there?
No, anything that has a low barrier to entry, so
Hmm.
like it doesn't need a lot of capital, like
Hmm.
few $1,000s. I'm okay with that.
Hmm.
So I think like the futures probably when
The futures won't
each
work.
tick move can cost a lot,
Yeah,
I
the
guess.
futures won't work for you. So
Yeah,
your
yeah,
choices are really for you stocks, FX, or cryptos. Now,
yeah,
for stocks, we're in a generational bull market. We're deep in that.
yeah,
We're deep in that bull market. That bull market. So at the moment, the bull
yeah,
market's been going on for 9 years. I think the longest
yeah.
one this century was 19 years, and
Okay,
the average one is about 10 years. So we're somewhere by definition towards the end of this bull market. but
Yeah.
bull markets are often the strongest in their final phases. So
Yeah.
we could get a couple of years now of very, very strong stock market growth. So that's something to consider.
Okay.
But the downside of
Okay.
developing a system for that right now is that you have to have a
Yeah.
plan that eventually the stock market bull will end. And then you have to
Yeah.
either go somewhere else, trade a different stock market around the world, or a different market
Yeah.
that's still a bull, or you
Yeah.
have to stop trading.
Yeah.
And
Yeah.
usually the most efficient thing is to build some rules into your system so that it just switches itself off when the market turns down. That's the
Yeah.
obvious thing
Yeah.
to do. So so stock trading systems, best case scenario, you're looking at outperforming the market. So
Yeah.
if the stock market does 30%, you might do 50 to 100%
Yeah.
depending on luck. If the stock market
Yeah.
does 20%, you might do 30 to 50% depending on luck. That kind of thing.
Yeah.
If you're looking
Yeah.
at FX is less dependent on the overall market.
Yeah.
FX is tricky. FX is trickier, but the position sizing and the mechanics are much easier.
Yeah, that's right. Yeah.
Well, you've done FX, so
Yeah.
personally, I like trading FX, but you just need to put
Yeah.
because it's so leveraged. You can go so wrong. You
Yeah.
need to put a lot of structure, around what
Yeah.
you're allowed to do. Like
Yeah.
FX systems are best when they're very, very mechanical.
Yeah.
It's and the other option is cryptocurrencies, which don't work that well for
Yeah.
purely mechanical systems, but we're in the middle of an extremely strong bull market in cryptocurrencies. So
Yeah.
if you're looking
Yeah.
at my opinion is that when the crypto market dies,
Yeah.
it'll never come back.
Yeah.
It'll be just 90% wipeout. But if you
Okay.
but I think it's very feasible to target 1,000% return in a year and a half to 2 years with crypto.
Okay.
But crypto
Okay.
is totally not suitable for any serious money. Like you can't use it
Yeah.
with money that you borrow against your house or that you
Yeah.
rely on. It's just like
Exactly.
I have about 5%
Yeah.
of my net
Yeah.
wealth in it.
Yeah.
It's like
Yeah.
you can only do it with play money. So
Yeah.
but that in your position, I would if it's only a couple of $1,000s, I would consider doing that.
Yeah.
We're in the middle of a very strong bull market. The odds are stacked in your favor.
Yeah.
It would be
But
quite.
if it's a bubble, right? What I
It's a
understand
total
is
bubble.
like sort of.
It's a total
Yeah.
bubble. But
Yeah.
the thing about bubbles is that they can go on for a lot longer than anyone thinks. It's
Okay.
a complete bubble. There's no fundamental value behind very much of it at all. They're all
Yeah.
about overvalued by about 90%. But the funny
Okay.
thing is, when things become so overvalued, they're more likely to
Yeah.
continue to be overvalued than not. As long as you don't fall in
Yeah.
love, as long as you don't fall in love with them and start to think that it's going to last forever, you can be fine.
Yeah.
So,
Yeah.
okay. So at that point, you decide between your different options, and there's pros and cons.
Yeah.
And then
Yeah.
we start to look at an edge that you feel comfortable with, and the edges that we choose mostly come down to personality. Like,
Yeah.
for example, I know this guy he runs a big blog called Slope of Hope. His name's Tim Knight. He's like a glass half full guy. He's a really pessimistic. He's a nice guy. He's a really pessimistic sort of a guy. So he calls himself a bear, and all he does is short.
Okay.
He wants the stock market to go down. All he wants to do is short. But he's this really pessimistic sort of guy, and he wants everything to fail. And it's his personality coming out in that. And I know this other guy. Have you heard of Taleb, the guy who invented the black swan,
Yes.
the black
Yes.
swan guy?
Yes. The Black Swan theory.
So the black swan guy, when he was a kid, he was in Lebanon, and his dad was
Yeah.
the finance minister, so they were rich, and they were like one of the richest people in the country, and everything was great. And then inside of 6 months, the country was a war zone, and he was a refugee, and he had nothing. So his whole worldview is that you can go from everything's totally fine to the world's blowing up just like that.
Yeah.
Which is how he
Yes,
came
like
up with the
that.
black swan theory. And so he
Yeah.
invented a bunch of options pricing theories
Yeah.
which are mathematically based, but it's all really trading his 5-year-old childhood experience, or when he was 9.
Yeah.
So in a lot of ways, the edges that we're best with are the ones that kind of suit our personality. So you've got this guy who's like whole life experience is that the world can blow up, and so his trading system is to take bets that he used to take way out of the money bets, puts that the world would blow up. And eventually it happened. Eventually 2008 happened, and he made $100 million and blah, blah, blah.
Yeah.
So we have to start to think, how do you feel in terms of is trending. Do you enjoy trading trending price action more or mean reverting? When stocks go up or when the price goes up, do you intuitively think it's going to come back down, or do you think it's going to continue?
Yeah, I think I'm more optimistic. So I think like I would hold it and expect it to go up.
Okay, so we're gravitating towards a trend following approach, right?
Yeah.
So if we're looking at trend following as an edge for you in the FX market, which I think is what you're leaning towards, there's the two best edges in trend following. The two best edges are getting on a very strong trend early with a sign of strength, and pullbacks in strong existing trends. So, so I can show you how to build systems around both of those. But the obvious place to start is with an edge based around a hammer in an uptrend. So the first thing you want to do when you start thinking about how do I design an edge, how do I design an entry setup for myself?
Okay.
We're looking at so when a trend happens, generally what happens is that a new trend that's going to last kicks off very, very strongly. And it kicks off very, very strongly because there's always a bunch of people on the edges who wish they bought. And when they see something take off, they think, oh, damn, I wish I bought the Aussie dollar before it took off. And then they're waiting to buy any pullback. So these pullback buyers getting left behind is what fuels the advance, because eventually these guys are going to be forced to buy in late. So you can start designing your entry setup by either looking for a trend that kicks off strongly and with no pullback, or you could look for a trend that you already think is strong. So and then a pullback. So we have to think of some method of classifying how do we decide we have a trend or not.
Okay.
So
use the moving average.
So you could use moving averages in a number of different ways. So some of the different ways that I've seen used, you can have a moving average crossover. So say the moving average 20 is above the moving average 50. You call that an uptrend. That's one way of doing it. Another way of classifying it is a close outside a Bollinger Band. The usual one for a strong trend is a close outside a 3 standard deviation Bollinger Band. So what you're trying to do when you look at building these entry setups is not to think about technical analysis as being predictive in any way, shape, or form. You're not trying to guess the future. You're trying to use indicators, things like Bollinger Bands and moving averages and oscillators and what have you, as just visual aids that you can use for objective rules in building systems. Right. So if I was looking for an entry setup in an uptrend, first of all, I'd probably start with one moving average crossed over another moving average would be a reasonable place to start, and then I'd look for some way of classifying a pullback, either a minimum percentage or maybe a maximum percentage as well, or you could use an indicator if you like using indicators. The point is to find things that you feel an affinity with. So the sort of things that you like on your chart that you believe in. But the type of behavior that I want you to do is go and experiment with your charts, go and play around with them, find things that you like, and see if you can isolate something that happens when you get a pullback in an uptrend that's going to stop and then reverse again. You know what I mean?
Okay. Yeah.
So what I'd like you to do is just take a few days, muck around with your charts, play with a lot of different indicators and oscillators and moving averages and Bollingers and all kinds of things, because the truth is none of them have any predictive power at all. You just find some you find some that you get a feel for, and you don't use too many of them, and then we come up with an edge. And then the next step is we're going to test that with scatter plots and prove to ourselves, is it an edge or isn't an edge? And if it isn't an edge, we go back to the drawing board, we find something different. And if it is an edge, we start fleshing that
Yeah.
out with an exit algorithm and then some other
Okay.
rules, and we put it, and then we gradually build all the structure of that out.
Yeah.
So eventually we've
Okay.
got something that we can backtest. And then once we
Yeah.
and then
Yeah.
once we've got something
Yeah.
to backtest, then
Yeah.
you with me?
Okay. Yeah. Yeah. And what time frame is like you would say like
That-
4 hours or?
That is a very good
Okay.
question. Okay, so
Yeah.
let's puzzle that out. Let's say let's say you're dealing. Let's say you're trying to make 10 trades a week,
Yeah.
which you're not, because you only
Yeah.
want to
Yeah.
trade once a day, right? Okay.
Yeah. Yeah.
And you can't. All FX trades are inherently correlated. Like any trade you take at the
Yeah.
same time is going to probably be a winner together or probably be a loser together. So there's no real
Yes,
point
together.
in
Yes.
taking 10 FX
Yes.
trades at once. So
Yeah.
so you're limited to a maximum of 5 trades a week.
Okay. Yeah.
Okay, is it?
Yeah, 5 trades a week.
Yeah, 5 trades a week. So your
Okay.
choices are to use. You don't want to be at the screen for too long, right? So you're limited to.
Yeah. Yeah.
You're limited.
Yeah.
You're limited to daily charts, which is good because daily charts
Yeah.
are far more reliable than the other charts.
Yeah.
Most often, if there's a conflict between the 4-hour and the daily is going to win, just because more
Okay.
people use it. So.
Yeah.
So, in line with your goals, I would say
Yeah.
daily
Yeah.
charts, 5 charts a week. If you get that
Yeah.
right, you should be able to build a system with an expectancy
Yeah.
of about 0.2. For your first try,
Okay.
I think 0.2 is a
Okay.
reasonable goal. So if you're risking 1% every trade,
Yeah.
that means you
Yeah.
take 5 trades a week with an expectancy of 0.2, which means that
Yeah.
you should, on average, be making 1% a week compound.
Yeah.
That's
Yeah.
if you execute perfectly, you should be making about 1% a week.
Okay. With 0.2 expectancy, right? Yeah.
Correct, because expectancy is
Yeah.
is your average win multiplied by the probability of win divided by
Yeah.
your average loss multiplied by the probability of loss.
Yeah.
Cool, man.
Yeah.
So
Yeah.
so the next step, spend a
Yeah.
few days, look at your
Yeah.
charts, see if you can come up
Yeah.
with some ideas for
Yeah.
anything that you
Yeah.
come up with. Run by me. Just shoot me an email, and
Yeah. Sure.
we'll keep working on it. And if you can't come
Yeah,
up with any
all right.
ideas, I'll come up with some for
Yeah.
you.
Okay.
All right, man.
Sure. Thank you. Thank you so much.
See you, dude.
Yeah. See you.